Guys, Akil Stokes here. Welcome back to the Trading Coach Podcast. Got another video edition for you today, so make sure you're listening or watching over on Spotify, or head over to YouTube if you want to see the video version. I'm going to share some cool graphs and maybe even look at some charts to kind of illustrate my points. Now, the point of today's podcast is a timely one, as we're going to be talking about the recent U.S. government shutdown. We're going to talk about why it happens, what it means, and more importantly, what effect it may or may not, spoiler alert, have on the markets. So let's start from the top. What is a government shutdown? Well, a government shutdown occurs when Congress fails to pass the necessary legislation for the upcoming fiscal year. When this happens, we see non-essential agencies get closed down, and we see non-essential agencies get closed down, government agencies get closed down, and we see non-essential employees get furloughed, meaning they are released without pay until a funding agreement is agreed upon. Now, for everyday people, normal folk, right, this can be a really big deal, right? Millions of families may go without paychecks, government services get delayed, there's a whole flight thing going on right now. But more importantly, uncertainty about your future creeps in. And that's very important. But because this is the Trading Coach Podcast, we're going to take a look at this from a trading perspective. And from the market's perspective, at least historically, shutdowns really don't move the needle much if they are short-lived. And again, this is something that we'll revisit later because that's a very big if. So just to kind of emphasize this point, hopefully I'm putting up a pretty cool chart that goes along with it. If I haven't done that already, I don't plan this in advance. But we've had 22 shutdowns since 1976. And the market's reaction has been pretty random, right? Sometimes it sells off, sometimes they rally, sometimes they do absolutely nothing. And so far, this time around, the reaction has been kind of, this is a technical term I'm about to use, so write this down, meh. Now, with that being said, this time might be different, and here's where things get a little bit interesting. Now, you know, in trading, I very heavily value backtesting, right? Backtesting is the process of going through historic data, through historical market conditions to see if your strategy works or not. And although past performance is the famous quote, right? Although past performance is not indicative of future results, it's very helpful because that's the best that we can get. We do this in the markets and we do this in pretty much every other aspect of our life. We take data, tendencies from the past, and we use that to create expectations for the future. With all that being said, it's also important to understand that, although we have all this information saying what the future might do or might hold, we never know because the future is unknown and every single circumstance is unique. And this circumstance with our government shutdown is no different than that. Why, you may ask? Well, we are in a very specific and uncertain political situation that is different than we've ever seen before. Some might say it's a whole different animal. I don't know where that term comes from, but if politics was normally an animal, this would be a different animal. Now, regardless of what animal we're talking about, the biggest factor when it comes to government shutdowns is the length. Again, typically small shutdowns don't really make a difference, and it has the whole thing with the economy and how the economy doesn't adjust until blah, 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 blah. But the longer this goes on, the more important it's going to be. And there are some very important factors for why that is. So why is this animal different? Well, we have a few things that are going on that typically don't go on normally in our economy, in the world, but specifically the U.S. economy, which what we're doing affects the rest of the world. But anyway, one, we have tariffs, right? We have tariff uncertainty that is picking up once again. It's been this roller coaster of tariff threats, then believing they're not threats, then tariffs going in, then tariffs being banned, right? And then new tariffs being announced, right? So that whole tariff thing, which always brings uncertainty, is picking up once again. We have a jobs problem here in the US, which could easily get worse. We won't necessarily know because the numbers aren't going to show us yet because they won't come out because of the shutdown, but it could easily get worse. And not just from the furloughs or the potential permanent firings as the Trump administration has threatened, but also from companies putting the freeze on new hirings because, again, they don't have a clear path of what's ahead of them in the future. On top of that, if you want it more, we are also in a very, I'm going to say this the right way, we are in a very delicate point in the U.S. As far as monetary policy goes. If you go back and listen to Trading Coach Podcast, episode 1216, I forgot the title, but I remember the number, we spoke about the latest FOMC release and the split that was happening within the board. Remember, they're stuck in between two unique problems. They have the Fed's job is to do two things, if I can get my words out. One is to curb inflation, two is to have healthy jobs, and they're currently failing at both. The problem is one solution helps one and doesn't help the other solution helps the other but doesn't help one, so they're stuck between this rock and a hard place. Not to mention that they are very, I guess because of this, they are very split on the board, and not to mention the board may have been infiltrated by a person wearing a mask that is actually Donald Trump underneath. Yeah, go back and listen to that podcast. It's interesting. Now, to add another situation to this mix, this soap opera of everything that's going on, guess what? Because of this government shutdown, we are not going to have, or most likely not going to have, some key economic reports, right? We have jobs numbers that the big ones due tomorrow or today, whenever you're listening or watching this, which is Non-Farms Friday. We have inflation reports, right? Again, the two things that the Fed is looking at in order to make their decision. We're going to be missing those key decision-making points. We're going to be inching closer and closer to an October rate decision, which essentially means the longer this goes on, they may be making a blind decision or no decision at all. Either one would probably shake the markets. Now, just to continue about some other, I guess, ripples in the pond of government shutdownism, and it doesn't stop there, right? Another ripple effect of the falling pebble that is government shutdownism into the pond of the financial markets, from an investing standpoint, is going to be reduced government staff, which means reduced oversight, and reduced oversight specifically in places like, or agencies like the SEC, which is the Securities and Exchange Commission, and then I always get this one messed up, the CFTC, which is the Commodities and Futures Trading Commission. That one has always bothered me. I always get confused if it's commission or committee with that one, but one of the two. I think it's commission, but it doesn't matter. Anyway, the point is they will have fewer hands on deck to do numerous things, right? Fewer hands to review corporate filings, to investigate misconduct, to monitor the markets in the way that they usually do. So you shady people out there, this is the perfect time to strike while less eyes are upon you. And if you're someone that's waiting for IPOs, right, initial public offerings, yeah, you may be waiting longer than expected because now that pipeline of new IPOs, it's going to take longer to kind of get through that and expand into the open water, which is the market. Now, with all that being said, I'm a technical trader, so all of that is fun, but what I care most about is what's happening on the charts and what tells me the truest story of what you guys, the investors, the market, what you guys consider to be valuable or not valuable is what's happening on the charts. And what's been happening on the charts? Well, not too much. Well, a little bit, but then overall not too much. So heading into the shutdown, we did see some weakness in the US dollar. We also saw more strength in both gold and the yen, right? And we spoke to our traders on the platform, not this morning, but a few days ago about why this happens. And understand that the market is always bouncing between kind of safe havens, right? The dollar is the safe haven. If it's not the dollar, it's going to be gold. So when people are when they don't want to invest in the dollar, they take their money from the dollar and put it in gold. Or they don't want to invest in the dollar, they feel dangerous being in the dollar, they take it and they put it in yen. So it doesn't become much of a surprise when you see that a little bit of fear for the US dollar, we see gold, we see yen start to grow in strength. On Wednesday, we also had a jobs report come out, the ADP employment change, which typically means absolutely nothing. They say it's supposed to be like a precursor to the non-farms, but it really doesn't play much of a role in the market. Well, this Wednesday it did. It didn't play a massive role, but because the market was pretty much banking on us not getting a non-farms this Friday, that's kind of the best jobs number they're gonna get, aside from the thing that came out today with the private sector. So they did take that number, not with a grain of salt, but with whatever the opposite of a grain of salt would be, a thing of pepper, maybe, perhaps. I don't know. All that to be said, today, Thursday, when I'm recording it, we've actually seen the opposite, right? The dollar is strengthening yet again. Gold is going down. And the reason for that is I don't even know. All right, I'll do some research on it later just because I'm curious. But it's just the market doing regular market movement. And like I mentioned earlier, when these short-term shutdowns occur, the markets just really shake it off. They don't really care. They kind of just go on with their normal marketing things. And that's what we're seeing right now. Now, with that being said, although the market will shrug off short-term shutdowns, if this becomes a longer-term shutdown, I do think we're going to see more and more of a reaction in the market. Not because the more uncertainty we have, the more nervous people get and the more our minds start to do weird things. But remember, we are in an interest rate cutting, maybe, right? Cycle. We're supposed to be an interest rate cutting cycle here in the US. And the next interest rate cut, whether it's 25 or 50, there was some debate between that. We'll never know because we don't have the data now. Is supposed to come at the end of October, October 29th. And the closer we get to that date with more uncertainty, we're going to start to see more sporadic moves in the market. We're going to see the market start to assume different things, and then when that news is released, those people that assumed wrong will see massive floods in the opposite direction. Not to mention, we haven't even talked about the FOMC. Poor them, from their perspective. I don't know how the hell they're going to make a decision. Like, they're screwed. They were already screwed, again, rocking a hard place. Now they're screwed because if they do something, they're doing something blindly. If they don't do something, they're going to get criticized for not doing anything, even though they don't have the data to make the decision that they want to make. So that's why, that's what you get for being on the board, right? So anyway, here's the bottom line, right? Short-term shutdown, probably not a big deal for the markets. Longer, drawn-out shutdown in the middle of an already fragile economic situation, economic and political situation, that could be a different story. Either way, I'll be keeping a close eye on things, and of course, I'll update you guys here on the Trading Coach Podcast if anything unfolds. As always, thank you for tuning in. Whether you're listening or you're watching, I appreciate the love. If you want a deeper dive into the FOMC situation, remember, go back and listen to Trading Coach Podcast episode 1216. And if you want more daily trading tips, right, head over to the YouTube channel, right? If you're on the YouTube channel, then head over to the Shorts tab within the YouTube channel and check out that section. I upload daily lessons to help you become a better trader. They're free. They're there for you. It's my way of giving back because, well, I didn't have that when I was growing up in the market. Anyway, until next time, plan your trade, trade your plan, like, subscribe, do all the things to support the podcast, and I'll see you guys next episode.